Well, considering the seismic nature of the election result in Greece, market reaction has actually been relatively muted this morning, and it comes off, of course, on the back of a 7-day rally in Eurostoxx equities. Well, I think at the moment it's a 10 to 20% chance. I think at the end of the day it's in no one's interests for Greece to leave the Eurozone. It's not in Greece's interest. It's not in the interest of whoever remains within the Eurozone. That said, you'd have to say that the direct economic impact of Greece leaving the Eurozone is actually going to be quite limited. Unlike a few years ago, there was the possibility of contagion because there was significant private sector and intra-bank exposure to the Greek sovereign. At the moment, the vast majority of Greek debt is in the hands of official creditors, the EU and the IMF and so forth. So it's really a case of if Greece were to exit, that would be a write-off of the debt that these bodies are carrying, which would amount to, let's say, 3 to 4% of GDP maximum. So within the grand scheme of things, it's a bit of a rounding error. I think we'll only really see a significant move if we feel that Greece is setting up a domino effect in terms of similar demands from Spain, from Italy, and consequently a big political upheaval, and then perhaps an unravelling of the euro. But there's no sign of that yet. And I would add, actually, that precisely this sort of cascade effect is absolutely what Germany wants to avoid, and that's, of course, is one of the reasons they're playing hardball with Greece right now.